Welcome to Investor in the Family Radio, a podcast dedicated to helping you make better investments in less time so you can live more life. My name is Brian Bain and I'm your host. You can find more shows and other valuable content at investorinthefamily.com. Well, on today's show, we have Matt Bohlsen with us from Seeking Alpha. Matt, thanks for joining us.
You're welcome.
Well, Matt is an Australian hailing in from the Philippines, and so he was incredibly gracious to stay up late to join us on an interview today, so we really appreciate that. But especially, we appreciate Matt's work on Seeking Alpha, and especially his coverage of the electronic vehicle boom or the EV boom and trend that's going on right now. And there's other trends that he covers, but that has definitely, from my observation, been a primary one. So I asked Matt to join us in the show today to kind of help us understand what actually is going on with the EV or electronic vehicle boom. It's something we hear about a lot, but what's actually going on behind the scenes and what can we do as investors to profit from it? So Matt, do you mind just giving us a broad introduction to what's going on with electronic vehicles and why should we be excited as investors?
Okay, thanks, Brian. Well, primarily it's centered in China. About 50% of electric car sales come out of China, and the vast majority of electric bus sales are from China. So it's been brought about through government policy and incentivized through subsidies. But China, you're second leader, and then the probably after that. Not just electric cars, of course. It's spanning all sorts of electric vehicles. We tend to report mostly on the electric car sales because they're the sort of centerpiece and they're the most common vehicle. But it's certainly entailing all sorts of other vehicles: motorbikes, trucks, ferries, ships. Pretty well most of the transport devices, and step by step it's spreading across that sphere.
And so you mentioned China as being the centerpiece for it, and you mentioned also, but after China, what else did you say? The signal broke for a moment.
It's the second biggest area for sales is Europe,
Okay.
and then followed is the United States. So in terms of market share, in May, China reached 5% market share, which was quite a milestone, really. And Europe is around about 2%. Let me get an exact figure for you here, if I can. Europe was 2% in May, and USA was 1.7%. So they're the leaders. And the sales for May, just as a guide, were up 75% year on year. So previous years' sales have been growing at about high 50s, 60% per annum. Right now, it's even accelerating up to 75% year growth. So, and a lot of that's due to China.
Wow. And market share, I guess the market share of total vehicle sales, I'm assuming?
Yeah, total light vehicles. So,
okay, right.
Call them light vehicles.
Yeah.
I call them electric cars. They include light commercial vehicles.
Okay. Well, that's helpful. That's helpful for me because, again, I mean, this is, one problem we run into as investors in the U.S. and the markets are most of the markets we invest in in the U.S. are centered in the U.S. So we tend to be very U.S. centric focused. And so it's helpful to realize that, and we hear about the electronic vehicle boom and what's happening. And we think, well, Tesla is obviously electronic vehicles, but then most of the news you hear as investors about Tesla tends to be negative about how they're not performing and what they're not measuring up to. Then you look around, you think, well, you see a few, like yesterday I saw a BMW electric car, or you see a Toyota Prius, and you're like, oh, they're kind of goofy looking. I'm not sure if that's, is this really going to be a big deal? But then you hear about this EV boom. It's helpful to realize, well, if you really want to realize see what's happening, you need to look outside of the U.S., specifically to China and then Europe. That's helpful because looking around us here in the U.S. is not where you're going to initially see this taking place.
Yeah, and I mean, electric vehicles at the moment are suited to large cities and countries where there's pollution problems, and they're suited to shorter range right now. So that's why also countries that are supporting it, like China's got probably one of the world's worst pollutions. And actually, that was my first article for Seeking Alpha about 3 years ago. It was called Chinese Electric Vehicles About to Boom, a bit over 3 years ago. And in fact, it was pretty well on the money. Not long after I wrote that article, the Chinese electric vehicles started to boom. And really my rationale at the time was that they have a severe pollution problem and they're going to be motivated to fixing it. And the second factor, of course, is they'll reduce their oil dependency. And the third factor is they'll create an industry where hopefully, as far as the Chinese are concerned, they can become, exporters of cars. Because traditionally, obviously, countries like Germany and Japan and America have dominated the car manufacturing world, and China hasn't really exported. So that's the master plan from China. About 50% of all electric car sales Chinese are being sold in China at the moment. So, it's definitely a China story. So I can understand if you're in some parts of America, because it depends also where you're in. Okay, if you're in California, you'd be quite, up to date or seeing electric vehicles on your streets. But if you're in other areas of America where subsidies were less or people were less, inclined to buy an electric car, or where they had to travel greater distances, then, people's views will sometimes be shaped on their location. But, the wise investors, they will really look at the big picture and look at the trend. I mean, I'm also on that topic, probably jumping ahead, might be one of your future questions, but Bloomberg put out an update recently on electric vehicle sales, and they forecast them to increase tenfold by 2025 and 27-fold by 2030, or 54 times by 2040. So that's sort of what also drew me into the space, because, my service is called Trend Investing, and what I'm looking for is a big trend, a big tailwind. So it's probably a little bit similar to, say, smartphones when they first came out, and then suddenly everyone has a smartphone. So in the early days when electric vehicle sales were under 1%, there was more risk and perhaps more upside because some of the stocks hadn't run yet. Now we've got different issues. We've got less risk that the EV boom is going to occur because, penetration's increasing. All the major car companies are bringing out electric vehicles. So it's really just a matter of how fast it is now. I think most people have accepted it's going to occur. So the challenge now really for me is to find the best investment opportunities within the electric vehicle space, knowing that it is going to happen. Whereas 3 years ago, it was probably more about, is this trend actually going to happen? Lots of opportunities and several stocks. I had Katanga Mining that went up 23-fold last year, so anyway, I'll let you get your question. Yeah.
Well, tell me,
that was my star performer, So.
Yeah, no, 23x in 1 year. That's worth noting. I want to make sure I got a few numbers correct. You said, you mentioned a report that said EV sales are expected to increase fourfold by 2020. Could you share the rest of those numbers real quick again?
I didn't actually say fourfold by 2020, tenfold by 2025.
Okay.
27-fold by 2030 and 54-fold by 2040. And that's based on 2017 market share. So, if you put it into market share percentages, Bloomberg forecasts about 11% market share by 2025, 20% by 2030, and 55% by 2040. And actually, funnily enough, about a year or so ago, Bloomberg was well below, and as were others, on their percentages. And I was probably I was definitely a maverick in the industry, in that my models were forecasting similar to what Bloomberg is forecasting today, but they were doing that 2 years ago. And maybe it's my wild optimism, or maybe it's just that I could see that there was a strong reason that EVs would come in. So I assumed, like with any disruptive technology, it often follows the S curve, and it's quite exponential in its takeoff, which is really starting to happen now. Like even that 5% figure for Chinese market share in May is that's on a big volume. That's quite enormous. If you look at the global leading market share, Norway actually gets percentages in the 40s, but it's a small volume, so it's probably not the one that I quote.
Right. But Norway has about 40% of its vehicles are electric?
Yeah. I mean, it fluctuates month to month, but
sure.
I think last month was 43 or 44%. Norway are killing it. I mean, they're the global leader by a long way in terms of percentage share. But there's a lot of incentives there, and the Europeans are very probably leading the world in terms of environmental consciousness. So they like a very clean, pristine environment, and you can see that when you travel to Europe.
Sure. No, that makes sense. Well, one thing is really fascinating when you go, again, coming back to China as a primary driver of the EV boom and trend that's taking place. Being very motivated to fix the pollution situation, that is something I was aware of, and that makes perfect sense. Wanting to reduce oil dependency, that makes sense. And, as China continues to try to rise as an economic superpower, it makes sense they'd want to have less dependency on people on the outside. But one thing I had not considered is China creating an industry where they can export electronic vehicles. It makes perfect sense, but I hadn't considered that before. The idea of Chinese vehicles and cars being a primary export, I hadn't considered that before.
Well, it's even a step further, Brian, in some respects where, there's discussions in the cobalt world and the lithium world when we get onto those topics where, China's really starting to dominate battery manufacturing and ownership, if you like, or supply chains for the battery. So the lithium, the cobalt. There was a deal. Well, actually, South Korea is probably the other country that's starting to dominate as well. But China by far. So I mean, it's the typical China playbook.
Yeah.
Start a trend, buy everything up in the supply chain, and make lots of money and get rich. They're quite smart people.
Yeah, and patient.
Yeah, and they put the money out. And sometimes the Western world, in America and so on, and Australia, my country, we sit and watch things go by, and then the Chinese just keep coming in with their checkbooks and buying this, buying that. So and we're still, people in America sometimes even on Seeking Alpha, they're still debating, whether electric vehicles are going to come or not, and while they're busy debating, the Chinese are busy buying everything. So
yeah, well, that comes back to my point earlier, because in the U.S., and again, like you said, depending on where you live, you're going to have a different experience even within the U.S. I do not live in California, but whenever I do travel to California, like Los Angeles or somewhere else, I'm always amazed at how many Toyota Priuses are around. It's like one of the most, they're everywhere, to your point, but I don't live in California, so I don't see that nearly as much. Even more so, that U.S. bias, I think, blinds us to what you're describing, because, China being the size and having the economic growth that it's seen, we could talk about it here in America, but unless you're seeing it like you're seeing it being in Asia, it's so easy to miss. And even when we talked about China exporting cars, I keep thinking it's hard for me to imagine a Chinese brand of car manufacturer being really big in America. But then again, that's showing my bias, and like they don't even have to be big in America. They could export so many vehicles just to Asia and elsewhere, and not even need to sell cars to America.
Well, and BYD is already there, making buses, and it's selling buses all around the world, electric buses all around the world, and they've got a bus factory in Lancaster, California. I mean,
there you go. Yeah.
Just to give you an idea of the size of it, just last week, BYD announced plans to build an EV battery plant the size of 140. That's 140 soccer fields.
Wow. Where are they built? Is that in China?
Yes.
That's unbelievable.
I mean,
unbelievable.
The months before, Volkswagen signed a $40 billion supply deal to secure the batteries for the future Volkswagen cars, and that's the Volkswagen network, and that was signed up with CATL, which is the huge Chinese battery company, which is sort of going to be, along with BYD, leading the way on batteries. This past week, BMW signed a deal with CATL as well, CATL. So, it usually traces back to China, but it doesn't mean that. I mean, the irony of all this is that Tesla was really the company that started it all, and if it wasn't for Elon Musk and Tesla, you could argue that this EV boom may never have occurred. And then Europe's a very significant player as well, like I was mentioning before. So, and the deal with Volkswagen and so on. So, it's primarily a China story, but there's other players. I mean, there was a deal last week as well, or the other week, with POSCO out of South Korea, where they spent 280 million to buy the northern tenements of Galaxy Resources lithium project. So, 280 million for some tenements. Yeah, the checkbooks are starting to come out. They need a lot more because obviously we're going to need, you imagine if we're going to have 54 times more cars, electric cars, by 2040, we're going to need a lot more lithium, cobalt. And that leads me to the way that I'm playing this boom to some degree because, as you can see with Tesla, car manufacturers, particularly new ones, they have massive capex. There's a lot of expense to get new products to market, build new factories, build new battery factories, and the margins on car companies sometimes are only 5% profit margin, net profit margin. So given you've got all that capex up front in early years, that's part of the reason why a company like Tesla struggles to make profits. Whereas if you're a cobalt company or a lithium company and you're making a much higher net profit margin, you've got larger barriers to entry. You don't have all the existing what we call ICE, internal combustion engine car companies as competitors. There is a lot of competitors, don't get me wrong, in the lithium and cobalt and some of the battery metal spaces, but there is time delays in terms of a miner getting a new project up and running. So that's sort of why I predominantly, from an investment side, tiering the investments more towards the EV metals. Yeah.
Well, I really appreciate what you said, and I'm pausing as I'm taking notes a little bit here. I appreciate what you said about Tesla because, I did an interview with someone a few weeks ago on Tesla, and that individual made a comment. I was asking questions about competitions for Tesla and competitions in terms of electronic vehicles, at least here in the US or from Europe in that matter. And, the comment was made by my guest that, what did he say? Oh, with the fact that, well, if it wasn't for really Tesla they forced other car manufacturers' hand to get into the electronic vehicle game. Because before Tesla, most electronic vehicles you could name or think of, they were very non-traditional looking. You could say some of them were kind of goofy looking, relatively speaking. But they definitely weren't designed. It's almost like car manufacturers were making them because they felt pressure to make them, but they're almost designing them to fail in some ways until Elon Musk and Tesla came along and created an amazing vehicle. And now everyone else realizes, oh, we've got to up our game. And here we are.
Well, that's right. I mean, they started out selling the luxury cars, BMW and Volkswagen and so on. And so, of course, they're going to react, because they don't want to lose market share. So, and what you're saying is totally correct. I mean, Tesla came out and they made a cool car. It accelerates better. It's quieter. It's nice to drive. It's got a low center of gravity, all the good things. So the car became cool. It became, highly popular. I mean, how many Model 3s did they sell before it even seen one? I think it was 400,000 or whatever the number was now. Right. So, I mean, that's unheard of in the car industry. So, we have a lot to thank Tesla, and I know there's people on Seeking Alpha that bash Tesla, and I'm sort of neutral because I'm a finance guy, so I like to see profits. I like to see, money coming in on the cash flow is positive and all the rest of it. But I also understand where Tesla's coming from and the challenges they're facing, and as I mentioned before, with high capexes and all the rest of the things going on. So, yeah, I never criticize Tesla. I don't necessarily often recommend buying them, at today's prices for the reason. Doesn't mean they can't be successful from here.
Sure.
And they probably will be, but it's a risk for me. It's a risk reward measure. If I can see a good lithium or cobalt or might be nickel or graphite play or vanadium these days, and I can see this one Technology Metals Australia. It's a small vanadium company. It put out a PFS last week. Its net present value is post-tax 10%, 850 million Australian dollars, and its market cap's 20 million. So, I mean, if I can see something that's, pretty big upside, okay, downside risk, like you could lose 100% if it doesn't succeed, but your upside could be, 10 or 20x. Whereas I compare a Tesla, well, again, it could go to zero and it could have, well, it's debatable what the upside would be, but
sure.
So, for me, it's risk and reward. It doesn't mean I'm not a fan of Tesla, and I'm very admirable for what Elon Musk has achieved. And I think it's a bit of a shame that there's critics and knockers because, these people are quite rare in society that are prepared to put their own money in and start something up. And, and maybe he's made a few mistakes along the way, but, he's the guy that launched this whole industry. And I don't think I would be capable of doing it, what he's done. And I don't think many people will be capable. So, we should actually give him some respect that he deserves, not criticize him. But, that's the forum, and there's a lot of people shorting, and there's
Right.
all sorts of agendas there. So, and there's people still that work in the fossil fuel industry, that work in the car industry, that have reasons to grudge. So there's all these agendas come out. So
Sure.
I mostly try and steer clear of the Tesla.
Yeah, right.
Discussion.
Well, and I'll say one more comment, then we can move back. I do want to move back over to the miners, since obviously that's where you have heavily focused. And that was one of my comments in the other interview too, was the fact that, it is kind of sad that you have someone, and regardless of, you can come up with all the things you want about how maybe mistakes that have been made or whatever else, but if I'm in his shoes, I'd be making a lot of mistakes too. And speaking of Elon Musk, but again, how admirable it is for someone, and obviously he stands to profit significantly if this is successful. So this is not a completely altruistic endeavor he's pursuing. I'm not going to pretend like it is, but it would be really neat if there were much more of us that were cheering him on instead of trying to see him fail. And again, I'm not making any statements about him as a person. I don't know him or anything else like that, but what he's doing is pretty amazing, or attempting to do is pretty amazing. And I do appreciate at a minimum that you're, kind of giving credit where credit is due. So I appreciate that. So the metals, let's talk through. Obviously, we don't nearly have enough time to exhaustively cover this topic, but I think an introduction here, maybe we can even do a follow-up sometime later on. That could be fun. Because when I hear about the metals here, for mining, typically when I think of miners, you think gold and silver or precious metals. When I think of lithium, and again, I'm going to express some ignorance kind of on purpose, because I want to kind of make sure our listeners will be filling gaps to kind of where we're at and help play a platform for the future. First of all, I don't think of lithium as a metal. Lithium is something that happens. It's my battery. I imagine, like, I used to have alkaline batteries. Now I have lithium batteries, and that's just the fact there's even a metal there. There's just so many things there that I don't even understand, and we don't have to explain all that. But I guess just essentially, like, how these things factor into the electronic car boom, and then how we can start to profit from that. That's not a very clean question, but I think you know what I mean.
Okay. Well, lithium's normally found as a compound, and it's mined in different ways. There's different sources, and the end product's usually either lithium carbonate or lithium hydroxide. Lithium hydroxide is the preferred one that goes into the battery. So it's one of the components of the battery, and it's basically the electrolyte, because lithium's the lightest element that we have, or solid element, I should say, that we have. And in terms of its sourcing, it's very abundant. So, some people think that means it's easy to make lithium for batteries, but of course it's not, because it's in low concentration. So it's a question of finding sources where not only is the grade or the concentration okay, you also need to be able to extract it cost competitively. So one of the sources is the brines, which is found mostly in the lithium triangle in Chile, Argentina, and a little bit Bolivia. Then you've got to look at the chemistry. So there's a whole lot of things to understand with lithium brines, and it's quite expensive, the capex, to start to bring on a new lithium brine project. You've then got the spodumene, which is the hard rock source of lithium, and a lot of those are coming out of Australia and also in Canada, and that's in a rock. So you've got to crush the rock and then extract the lithium that way. It's a direct way to get to lithium hydroxide, so it's becoming more cost competitive than brine, which was traditionally more lower cost of production due to the fact that you only had to evaporate the liquid and get the lithium out that way. But, due to various factors that are occurring in the processing steps, and the fact that the end product is easy, it comes from spodumene lithium hydroxide, it means that the spodumene miners have started to become more cost competitive with the lithium brine players. So there's all sorts of discussions on the cost curve, which is the better, and so on and so forth. And it'll end up project by project. And there's also a couple of other sources of lithium that are sort of starting to get in the news lately, which is clay, which has traditionally been, let's call it, unproven and expensive, but it's starting to change. And that's actually going to be a subject for my next article. So, that's sort of a quick rundown on lithium and its sources. You then have miners at different stages. You have producers, and some of those, like Albemarle and FMC and SQM, they're diversified global chemical companies. So lithium's not their only product. Then you have some pure play producers like Orocobre, Galaxy Resources, and you just go down the list to the next tier developers, and then all the juniors. So it's been a tough year for EV metals, 2018. 2017, I would have had 10 or 15 at least companies double in value that were lithium miners and cobalt miners. And then there was a bit of a mini boom in the last quarter of 2017. Then 2018, we've had sort of a lot of oversupply scares, and then we've had the Trump trade tariff wars and all this sort of thing happening in recent times that's sort of sending the market a bit lower. So actually, for most of the EV metal stocks, depending on your timing of entry, you've either done extremely well or you might have done poorly. So if you'd come in around Christmas or beginning of 18, you might not have done so well because the market was on a bit of a high at that time, and we've had some negative supply reports come out, and some of also in probably recent months, some of the metals like cobalt have come off very high prices and just started to retrace back a bit. So look, the long-term picture's fantastic. The fundamentals, as I was saying, with, say, the BYD, 140 football soccer fields, and, the Volkswagen $40 billion deals and all the rest of it, that's 40 billion euros. The background fundamentals are absolutely superb, but it is a cyclical area, and in the short term, concerns over supply versus demand, various sentiment reasons knocks the market around. So it's been a bit of a roller coaster ride, actually, the last 3 years. But the one thing I have found in those 3 years, if you enter good quality companies and you enter them at sensible prices, and in my case, I run models, so I know what they should be worth and what they will get to be worth, assuming they make it to production if they're a non-producer, then you do very well. But it's not for the faint-hearted at the moment, and we are in a bit of a negative sentiment right now. So this is a bit of a time to hang in there.
Tell me, we don't have a lot of time left, but so you mentioned lithium and you mentioned cobalt. What could you name, like, kind of some of the primary metals that you look at when wanting to profit from the EV boom?
Well, the best two are lithium and cobalt because they're small markets,
Okay.
and so that's something. Some people will look at, say, one of the battery metals, manganese, for example, or you might look at copper. There's going to be a lot of copper used in charging networks, and there's quite a bit of copper in the EV, but copper's a huge market. So the one, not to say it won't have a small effect, and a bit like nickel's a fairly big market. So the ones with the biggest effect, they're going to be the ones where there's the smallest market, and I have models that run this through as well. So as the EV market share increases, you can just look at the amount of, say, lithium in each car, the amount of cobalt in each car, the amount of graphite. So the ones with the biggest impacts is actually lithium, cobalt are the first two. Graphite comes next, then rare earths, then nickel, and then some of the other ones like with almost no or minimal impact, copper, manganese, and so on. So the first ones are the key ones, and I guess that been the ones where most attention has been, and probably rightly so.
Okay, you said lithium and cobalt, and what was the second tier you mentioned?
Well, graphite would come next. In terms of, I think, the impact, it'll be most impacted by assuming we get increasing penetration rates of electric cars each year, because that's kind of like the driver of a lot of this. And after graphite, you'd be looking at either the rare earths, which are not so much in the battery, but that they're in the motor, the magnet of the motor, and there's a few issues there to discuss. And then beyond that, nickel, and then beyond that, copper and manganese. But they're, like I say, they're huge markets, and they're
right.
in their own. So, there'll be a lot of copper in charging network, and there's a lot of copper in what do we call it, in, solar and wind and the whole new infrastructure that's coming out. So it's not to say copper won't be a good investment long term as well. But in terms of just in the electric and the size of the market, the biggest impacts will be on the other ones.
Absolutely. Do you have, and before we wrap up the interview here real quick, are there any favorite investments or places you think that would be a good place for people listening to this interview who are not currently investing in any of these metals or miners? Is there a favorite company or companies you would direct people to look at to start researching, or a general direction you'd point people in before we wrap things up?
Well, I mean, they'd be best to come and join Trend Investing, because we, that's what we talk about all day.
Right, sure.
But to sort of do it, do it in a minute or two. I mean, the cobalt still has a lot of potential, because it's the market where supply is the most restricted. There's a problem in the supply chain because cobalt's more rare, and it's usually a byproduct of copper and nickel. So, and in the cobalt space, I still like Cobalt Blue. That was one of my companies that went fivefold in the last sort of 6 or 7 months. That's got a great product or mine, or I shouldn't say mine, project on the way in Australia. There's another one called Triton Resources that's a junior, a bit like a potential next Cobalt Blue. And then in the lithium space, actually, I think the good thing right now, if you're new to this space, is you've got good prices right now. Like on the cycle, we're at a low in terms of value, good value, good prices. So in the lithium space, look, Lithium America is a really good one for the US investors and the Canadian investors who can access that easily. Neo Lithium's another one I like. Some of the others I've mentioned earlier, Galaxy Resources. There's actually a lot of really good quality lithium plays that are out there right now that can do very well. And one advantage, lithium doesn't so much have a supply problem, but lithium's in everything. So, for example, the heavy vehicles don't always need cobalt. The Chinese buses mostly don't have cobalt. They just have lithium, and buses have huge batteries, and so will semis. So depending on the chemistry and as you go into the heavyweight vehicles, sometimes cobalt's not in there. So lithium has its advantages, cobalt has its advantages. Graphite, in a way, is an okay market because it doesn't get the same publicity. So Triton Resources is one that's done quite well of mine in there.
Could you say what was that first one again? I'm sorry. Syrah, okay.
Syrah Resources. Syrah. And Triton Resources is another one with potential. I mean, I could rattle off 30.
Oh, sure. Yeah. No, that's not necessary.
I think about at least 30 in there, because really, I mean, it all comes back to if the Bloomberg forecast or if my forecast proved to be correct, and we really, get something like, call it 40% or 50% EVs by 2040, or, a fairly high saturation rate. We're looking at big, folds. Like I said, Bloomberg's 54-fold increase from 2017 to 2040. So anytime you get a 54-fold increase in a product, and you've got a bit of a supply constraints, meaning it takes time for miners to go through all those processes. To start from scratch and get to be a lithium producer, you'd be lucky to do it in 5 years. And same with pretty well all miners. So, you have to go through all those steps that they go through, funding, and just I won't talk through all the steps, but there's an enormous number of steps. So that's usually going to take more than 5 years. So that's kind of the barrier to entry. Whereas an electric car company, there's a few barriers of technology, but, you can hire people who know what they're doing. You can set up factories, and you can probably start. I mean, in China, there's 100 different electric vehicle companies now, because the barriers to entry aren't so high.
Excellent. Matt, this has been exactly what I hoped it would be in terms of just a really great introduction and kind of getting me and our listeners up to speed on the EV boom. Thanks so much for your time, and thanks for all of your contributions on Seeking Alpha.
You're welcome, Brian. Thank you for interviewing me.
The information and opinions contained on this podcast are for educational purposes only. The information does not consider the economic status or risk profile of any specific person. The information and opinions expressed should not be construed as investment trading advice and does not constitute an offer or an invitation to make an offer to buy and sell securities.